Assalamu Alaikum everyone, welcome back to the channel. In today's video we are looking at a company called KLA. I've been doing a lot of research in this company for a very long time. I've been waiting for a bullback kind of thing, but it obviously hasn't happened that so far. If you look at the company and how it's trading, so for the year is up almost to 55%, year to date 27%, last 6 months is down about 3%, and just this month is actually down about 10%. And this is one of the reasons why I started looking at again, because of that pullback in the last basically month and so. And the last 5 days, I think it's just barely 1% up. This is one of the companies in the semiconductor equipment sector. So they don't make the chip themselves. They actually help the foundry companies. So the companies that make the chips will use this company to basically do testing and so on, and obviously use the equipment and so on. So they're not really they don't make it, they actually work well with these companies. And I saw this article last night. So basically the fact that KLA Corporation is benefiting from Samsung's 90 billion chip investment, because Samsung Samsung is basically, by the way, so I think it's the second biggest chip makers out there after TSM. So those two companies are great. There are companies that are very similar to KLA, like Applied Materials, ASML, and the Lam Research as well. All three companies are very similar to KLA. They deal with basically the makings, the testing and so on of these chips. And especially now every single company is trying to create chips that are actually smaller and smaller and faster and better. These companies are in a great position. And considering what's happening right now with the shortage, I feel like this company is in a very good position to benefit from all of that. And this is one of the articles that's a little bit more bullish. And when you look at basically the CAPEX, so basically capital expenditure for the 2021 to 2023, apparently is going to increase 53% compared to 2018 to 2020. Again, that is really mad. That's crazy when you look at that. So the total basically spend is expected to be around $90 billion for dynamic RAM and nano as well. So again, it's a very good, so dynamic RAM and nanos will obviously 40 and 50 respectively, increase it 50% and 40% respectively. I like that. I mean, I love the chip side of things. I like in terms of the semiconductor sector, hence why I actually bought this ETF. Okay, but my concern with the ETF is it's going to take a lot of my time to look at every single stock almost every quarter. So right now, the next couple of weeks, a lot of these companies will be releasing their earnings. So I have to then look at it and see if they're Sharia compliant. So that's a bit more challenging. Hence why I'm looking at other companies that I can put money on that will hopefully help me overall. So right, KLA is basically has a market cap of $50 billion at the moment. It's slightly, when it comes to the beta, it's a bit more volatile. PE, but at the moment it's about 25. So again, it's on the high end, but again, that whole sector is at the moment. And then the EPS, that is amazing in terms of the earnings per share of almost 14.4. And then you've got dividend yield of 1.28, which works out about $4.20 for every share that you own. Now, we're going to look at the financials. We're going to look at what the analysts are saying, and then I'm going to show you in terms of whether the company is overvalued or undervalued and so on. So total revenue from since 2018, looking at about 4 billion, 4.5, 4.8, 6.9, almost $7 billion. Gross profit, so this is the money they've actually taken away from basically after they paid for the cost of that revenues, the cost of that making, about $4 billion, from 2.5 to $4 billion. So it's absolutely heading in the right directions. And then when we look at their overall net income from 80 million to right now $2 billion, which is absolutely brilliant to see. Then when you look at the balance sheet, you're looking for two things. So I'm looking for current assets, which is about 5.6 or almost 5.7. And then when you look at the current liabilities, so this is how much they have to pay in the next 12 months. And this is the current assets they have. They can liquidate or sell and pay that off very quickly. The other thing I want to look at is the ordinary shares. So it looks like it's been consistently going down, which is really good. So they're buying back their own shares, which is really good. So they're paying you dividend, they're buying back their shares. That's great, because the shares that you bought long time ago are now worth more, basically. And then we look at the free cash flow. Again, there's a couple of other things that you should always look for, and operating cash flows and things like that, and how much they invest in, where they invest in that money, and so on. But I'm going to look at the free cash flow, which is basically money, basically what is left over after their capital expenditure. So basically the income, take away the capital expenditure, will give you a free cash flow, and it's heading definitely the right direction. So it's got almost $2 billion to pay the dividend for these investors. Next is the analysis. So if we go down to the growth side of things, you can see current year they're expecting about 32% or almost 33% growth, and the next year about 4%. I'm not sure how, to 3.4. I'm not sure how accurate that is, but again, if that's the case, that's absolutely fine with me. And then because the next 5 years per annum, they will be making about 15, almost 16% every year from there onwards. So really great company. In terms of whether it's overvalued, undervalued, at the moment is 2.2, which is almost about a buy. And the lows are 325, currently 229 per share, average of $394 per share. Right. The other thing I want to quickly show you is their overall, basically this quarter. So last quarter, they're releasing their quarterly earnings, I think in about 2 weeks time. So we'll check that again. But for now, this is the last quarter. So as you can see, the revenue is actually growing, the operating margins is growing, the gross profit is actually growing, gross margins growing, and the cash flows are also growing in the right directions. So there's a lot of data in here, there's a lot of information, but the one thing I want to show you is the breakdown or the segments where they get them, basically their money comes from. So in terms of semiconductor process controls, then a specialty semiconductor process, and then they've got the components and inspections. So these three sections, each one of them is actually heading in the right directions and is growing year after year, quarter after quarter, is actually increasing. Apart from this one that didn't actually go up last year, maybe because of the shortage situation, this actually didn't grow as much as they would have liked. And there's obviously then more breakdown of each sector, major product regions, so different regions and so on. So there's a lot more information in here that I'm definitely going to do. I've been looking at almost last 3 weeks. But one thing I want to show you before I move on to another section is the consistency of repurchasing of their own shares. Okay, so they're buying back their own shares every single quarter, and they're paying you dividend of almost 16 basically in terms of CAGR wise, 16% of CAGR, which is really, really good. And so that's compounding annual growth rate of 16%. You don't see that a lot. The only other company that I can think of that has it this high is actually Broadcom, which is almost like 50%. That company is absolutely crazy. But yeah, so it's really heading in the right directions. And then in terms of dividend, basically their payout ratio for these dividends is about 35%. Again, we're looking for about 60 or lower, but 35% is absolutely brilliant to see. Right now we're going to look at Morningstar and see what the analysts in Morningstar are saying. So right now, if you look at the fair value, it's about $360 per share. Last close was 320, almost 330. So it's fair valued at the moment. If you look at simply Wall Street, is actually undervalued by 23%. They expect the company to actually be around the fair value of $430 per share again, and a future growth about almost to 12%, which is really good. Now again, when we look at the tip ranks, similar thing again, almost $400 per share. That's what they expect. The low end $338, and currently trading at $329 per share. So really, really good overall, really great company. When it comes to how safe their dividend is about 71%. That is very good. So we're looking for anything above basically 60 to obviously up to 99%, which is the highest you can do. And in terms of dividend growth, they're growing it very fast, so about 17% basically, which is very, very good. Right, so the financial looks really good. The futures of the company in terms of where they're heading and in terms of where basically the overall semiconductor companies are heading, it's really a lot more positive. There's a lot more positive message coming out of these companies, and if this is one of the companies to benefit from, that's going to benefit the situation that we're in at the moment, the shortage situation, I definitely want to buy this company. I want to add more of my shares. I've only bought one share a couple of days ago. If I can find it, there we go. So I bought one share at the price of $328 per share. So I'm planning to buy more in the next couple of weeks. In fact, I'm right now considering, so I'm waiting for Apple to release its latest earnings and get out of that and then put the money into KLA, because I believe this company has a lot more growth. And with the situation with Apple TV and all that stuff, I'm not really comfortable with that. So will probably take that £1,000 and put it into here. So that's overall the company that I wanted to share with you today. As always, I'm going to do another video in the next couple of days just to give you a quick update of the portfolio. I haven't added anything else yet, so I'm just at the moment, just adding just the usual £250 a week and then see how it grows. It's up about 9% at the moment, or £2,800. And this week has actually been a really good week. I've added the 250, as well as that is actually gone up quite a bit because of I think from Monday onwards, basically the stock market has been absolutely great. Again, maybe next week it might not be as good, because we are heading in terms of the earnings. Basically, season is about to start next week, so I'm assuming a lot of the companies, I know Procter & Gamble, J&J, Tesla, and a couple of other companies I own actually are reporting their earnings. And when that happens, obviously from previous experience, I know a lot of these stocks will go down. Again, if they go down to a value that I think is attractive, I will definitely purchase more. I hope you enjoyed the video. Thank you very much. Assalamu Alaikum.